Hello and welcome to the SpaceNews Commercial Space Transformers series, where we aim to give you a behind-the-scenes look at the people and companies driving the space industry's commercial transformation. I'm Jason Rainbow, Senior Staff Writer at Space News, and today I'll be talking to Phillip Ingle, a Managing Director at Morgan Stanley's Investment Banking Division. Philip joined Morgan Stanley more than 2 decades ago as an analyst in Australia, but soon moved to New York, where he's been helping the investment bank cover large aerospace and defense companies. Several years ago, he helped Morgan Stanley fine-tune a focus on pure-play space companies, and in addition to facilitating mergers and acquisitions, has been helping space companies raise capital through the debt and equity markets. So, Philip, thank you for making time for me today. No doubt you're a very busy chap these days. So how does an investment banker wind up working in the commercial space industry? How did that come about?
Yeah, look, thanks, and pleasure to be with you here, Jason. I've always been personally passionate about space. Ever since I was a, you know, small kid growing up in Australia, I remember, space-themed birthday parties, and my favorite toy was space Lego. Um, I have been here in the US for 20 years. How I got into this professionally is I've been very active in the broader A&D, aerospace and defense ecosystems.
Hmm.
And several years ago, I said to myself, look, space is increasingly, um, you know, an important part of that ecosystem for our clients. We should probably think about spending more time with some dedicated space companies. And, we at Morgan Stanley started to do that. I didn't foresee at the time that we'd have, as much of a robust ecosystem on the pure play space side in terms of the sort of companies and how the ecosystems developed, but very glad to see that. So it came out of, our broader activities in aerospace and defense. And then again, spending some time with specific companies and specific space subsectors.
So what are some of the big commercial space deals that you worked on recently?
Yeah, no, so, we'll talk more about this in a second, Jason, but I say, at Morgan Stanley, certainly in the area I'm in, investment banking, there's really two key things that, we do for clients. One is facilitating M&A.
Mm.
And on that side of the equation, some large, relevant transactions that we've been involved in recently is number one, advising Ball Corporation on the sale of Ball Aerospace to BAE Systems.
The big one?
Um, a couple of buy sides, we advised Advent on their acquisition of Maxar. We advised KBR on their acquisition in Europe of OHB. And many years before that, although it was an aerospace and defense company, it had a large space business, including the old Kodak imaging business. We worked with Harris when they bought Excelis. On the other part of our business is raising capital for clients, and some notable transactions there would be, we did take MDA, the Canadian space company, public. We also took Rocket Lab public. Earlier this year, it was a Japanese transaction. We took Astroscale public, and then we've been involved in, raising capital for existing public companies, including Virgin Galactic. Those would be some of the more notable pure play space transactions, Jason.
And plenty more notable deals in the pipeline that you probably can't talk about right now, I'm guessing.
Hopefully that's the case, indeed.
Okay, good stuff. Yeah, and you touched on that. So what are some of the unique financial instruments or services Morgan Stanley offers clients looking to invest in the space company? Because I did want to kind of explore just where you sit in that ecosystem. What do you bring to the table, and for who?
Yeah, absolutely, Jason. I've sort of alluded to it in the question before based on the transactions we've worked on, but I'd say there's a few areas, again, from investment banking. Number one is M&A. So advising companies on selling assets, divisions, whole companies, as well as advising companies on buying would be number one. Number two would be helping companies raise capital. And that really comes in three forms. The first, which is more relevant for space companies, mostly because of where they're at in their ecosystem, which is raising equity. I gave the example for a little bit ago of, for example, taking companies public. Number two would be the convertible equity product is also relevant for space companies. Earlier this year, we worked with Rocket Lab when they did a convertible debt raise. And then the last form of capital would be debt. Space companies right now, are more in the equity and convertible capital raising side of the equation. Over time, debt will become a more important part of their capital structure. And so at a holistic level, it's M&A and capital raising from banking. There are other parts of Morgan Stanley, though, that I think are also relevant to the space ecosystem. Number one is our research department. Adam Jonas, Christine Leewag have been very active and also very early on writing research around space companies and the space ecosystem. And then the last part would be another area of Morgan Stanley, which is cash management. It wasn't as relevant when interest rates weren't as high, but now that interest rates are at a reasonable level, space companies have cash on their balance sheet. Cash is precious to them. And so helping them manage that, again, outside of banking is another important product and piece of advice Morgan Stanley brings to the table for space companies.
Okay. And it's interesting. You said that debt is going to become more important part of what the space economy is a part. It does to expand and grow. So we're talking loans and bonds and things like that. And you see that becoming more prominent in the way companies in this industry raise capital. So could you kind of, why is that the case?
Yeah, absolutely.
Yeah, it just in a general sense. So financial institutions like Morgan Stanley, what role do you see them playing, in the future as the commercial industry matures?
Yeah, so if you think about like that capital spectrum I talk about, and you just go to the very left of it, equity capital. Equity capital is the riskiest part of the capital structure. It's therefore the most expensive part. Debt is, from an investor's perspective, the least risky part of the capital, and therefore, from the issuer's perspective, it's the least expensive. What you generally see is that companies that are more growth orientated, companies that have less cash flow, less earnings, are not surprisingly issuing equity. Companies that have steadier business models, more certain, more visible cash, they're issuing debt because it's cheaper. And if they can and are able to do it, they're going to pick that. What you see right now is the space ecosystem, given the pure play space companies and where they're at in their life cycle, they tend to be on the less profitable side of the equation because they're investing their capital and they're growing their businesses. And that's why they're issuing capital. As those companies mature, and as they, have, and many of them are starting to do this, positive EBITDA, positive cash flow, they're going to move more towards issuing debt because, again, it's less expensive for them. And I'd say Rocket Lab's a good example of that. They've done an equity deal, I think, over time as their business matures. The next stop on the capital raising ladder is debt. Just as an aside on that, Tesla's a good example. When Tesla first came out, it was equity, IPO, equity issuance. They then moved to convertible. Now today, Tesla's a more established company. It has positive EBITDA, it has positive cash flow, and they're issuing, cash. Hopefully, as the space ecosystem evolves, we'll also see that, because for the issuers themselves, it's obviously better to be, accessing the cheaper capital, which enables you to better grow your business. Hopefully that makes sense, Jason.
It does, yeah. And a nice using Rocket Lab there as a poster child for where companies in general might be moving to in terms of their financing and what their plans are to raise capital. So what key factors then does Morgan Stanley consider when evaluating the long-term potential of companies in the space sector? Because I'm guessing you're slightly more risk averse than a venture capitalist.
That's right. And again, as an intermediary, it's more how are our clients' risk position, i.e., private equity, i.e., companies, and i.e., public market investors. And you're absolutely right. Their risk tolerance is, lower than, for example, a venture capital firm. I
Mm,
think the number one thing we look for, and indeed by extension, the investor community we're dealing with looks for, is market size. Is there a big TAM opportunity to address? Number two is the timing to address that TAM nearer term? Um, it's great to have a big TAM, but if it's only going to be addressable in 5, 10 years' time, that's a very different equation to addressable now and in a shorter period of time.
mhm, mhm.
The second thing we look for is path to profitability. Um, I think in the world we live in today, which is different to the world we lived in a few years' time when a lot of space companies, started accessing the public markets, rates are higher. There needs to be a shorter path to, even if it's not cash flow positive, it's EBITDA positive, and then visibility into cash flow positive territory. Investors, have less patience for, as an example, a company that's only going to be cash flow positive or EBITDA positive, 5 years out.
Right.
Um, and uh, the third thing we'd look for, or related to those two things, is I think that companies that have a application for their products that are on Earth, at least in the near term, are more likely to find sources of capital. The classic example of that is Starlink, right? There's an application for that product on Earth, i.e., broadband, as opposed to space for space applications. So I think the ecosystem will evolve for the companies that are either, providing commercial applications back here on Earth,
Mhm,
or the second place, which is really important, is space companies that have a government defense angle. The government defense part of the ecosystem, that market is large. And so we're seeing that companies that are addressing that are more likely to get interest from, the investors that we deal with.
okay, that makes sense. So yeah, think about providing broadband on Earth before you think about broadband on Mars.
Or,
You
or you're or you're going to provide, in space fueling for in space applications.
Right, right. Okay, and I don't know how much you can speak to about this, but Morgan Stanley put out some compelling research about half a decade ago, forecasting a $1 trillion space economy by 2040. That's triple what it is today, depending on how you track it. What do you see as the key drivers behind this projection? What's going to get us there?
Yeah, great question, Jason. Again, I go back to my earlier comment. Completely independently of uh, me and the team in investment banking, our research analysts, again, Adam Jonas and Christine Leewag, were very forward thinking in space,
Mm,
and early to write about the sector and continue to put out, great research around it. So, credit to them. And they did put out the call for $1 trillion space economy by 2040. If I think about the two key things to enable that, I touched on it before, but the first one is these mega constellations that have, applicability um, here on Earth. So that's Starlink. It's obviously what Amazon's doing. I think it's what AST Space Mobile's doing.
mm.
It's, other companies like that that are tapping into these huge markets for broadband and other connectivity applications here on Earth. If those are successful in terms of those mega constellations, that'll feed into successful launch companies. That'll then feed into other successful applications that are around the space ecosystem. The second thing that I think is really important, at least in the near term, to the development, of the ecosystem and achieving that trillion-dollar economy, is what's going on with near-peer competition. So China, Russia, the importance of the space domain for the warfighter.
Hmm.
I think that is going to be another key driver here in terms of applications in space for the US government, as well as our allied governments across the world. That is the other near-term place that we see as an important driver of the trillion-dollar economy. Over time, as those two parts of the ecosystem develop, I then think you'll get ancillary benefits in terms of what's happening, in terms of space applications for in-space usage. But at least in the near term, those are the two key things to achieving that trillion-dollar economy.
Got it. Okay. And you focus more on the big legacy space companies, but how do you expect traditional industries to be disrupted by the growing space economy, for better or for worse? And which sectors might be disrupted the most?
Yeah, again, I think I've touched on one of them at least, which is the whole, communication, broadband, ecosystem. There's no question, there's some disruption going on there, and it's interesting to see some of the traditional, for example, broadband terrestrial providers, Verizon and others, partnering with companies like AST Space Mobile. I think that's just a key output of the dynamic going on there.
Mhm.
The other thing that I think is important here in the near term is the International Space Station is obviously due for retirement. The Chinese have a space station up there. The US and its allies, there's no question that there's going to be a replacement, maybe even more than one replacement for the space station.
Mhm.
I think that there's the potential over time, certainly as I talk to colleagues in these sectors, for disruption to what happens in the science, pharma industries in terms of what you can do in space uniquely with manufacturing. And so that'll be an interesting ecosystem to watch over time. And then the third place, which I think is further out, personally, it's interesting to me as an Australian that lives in New York City, and it takes you 25 or 24 hours to travel back home. What's going to happen over time with the transportation
Mm.
ecosystem? I know SpaceX, for example, has pretty interesting ambitions there. Again, that's a longer term disruptive force. In fact, it's probably multiple years out. That would be a third, place to watch further on the horizon in terms of potential disruption, from the space technology and companies in the ecosystem.
Interesting. Okay. And then slightly maybe a different topic altogether, maybe. But you alluded to some of the the big transactions you've worked on and some that you might be working on now. Is the increasing focus on sustainability and space debris mitigation influencing investment decisions for the larger traditional players in the satellite sector that you speak to? Is it becoming more of a kind of a bigger topic in these discussions as they look to make M&A transactions and other kinds of deals in this industry?
I think it's particularly for the US government, a topic that's got more airtime, within the Space Force, within obviously NASA, but then within the companies. It hasn't, necessarily, risen to the level I think a number of people hope for.
Hmm.
What is an interesting data point, though, is I referenced it up front. Earlier this year, Morgan Stanley took a Japanese company, Astroscale, public.
Mhm.
Astroscale, a big part of their product and service offering is debris removal. And they had a successful IPO. They obviously were able to garner interest capital, and that capital is going to be useful as they continue to develop. The product they have both to facilitate space debris removal, but then ultimately as well, ideally to facilitate refueling and other applications for satellites in space, which will extend their life, improve economics, etc. So the fact that a company like that, where a big part of their business model revolves around debris removal and applications associated with it, was able to access the capital markets and is now public, I think is a useful sign that space debris removal, while it probably hasn't gotten the full attention it should, at least is starting to get traction.
Yeah, wow. And then how, in general, how are advancements in satellite technology, such as miniaturization and AI integration, affecting the competitive landscape? As part for the space industry that you're involved in, the part of the space industry, the
Yep.
company that you talk to, how are these advances affecting them? Because when people think about innovation, they think of startups and the upstarts, but what is taking place at your level, as it were?
Yeah, I think that miniaturization, I also think that, for example, on the hardware side of it, I think it's uh, great for the ecosystem as a whole. I don't think it's great for the US government that you've had new players stepping into, for example, the satellite manufacturing ecosystem. So traditionally, it used to be an ecosystem where there are only really 5 companies that could make satellites. With advances in technology, including miniaturization as an example, you've got a whole host of other companies that can now successfully make satellites both for commercial but also government applications. And to name a few, Rocket Lab's one, MDA's one, um, obviously Terrain Orbital that Lockheed Martin recently bought is one. And then there's some as well in the private equity ecosystem like York Space that won.
Mm.
Uh, so what that is doing is, first of all, it's bringing down costs for the end user, which enables the end user to then either A, put more satellites in space for different applications, or B, enables the end user to take the excess capital and use it elsewhere. And I think that's good for the ecosystem as a whole. There are also companies out there that are, for example, disrupting the traditional geo satellite market, where satellites have traditionally cost hundreds of millions, billions of dollars. As costs come down there with different applications and different entrants, it enables the US government to do more with less. So in the near term, I think that is an important development for what the US government's trying to do. Again, back to the near peer competition. I also think that miniaturization, that decrease in the unit cost of satellites is also facilitating, for example, ambitions that Amazon Kuiper has, obviously the ambitions that someone like a AST Space Mobile, and then obviously the ambitions that Starlink has. And I think that's all, good in accruing to the benefit both of commercial user on the one side, but also the US government on the other. So I
Mhm.
think these developments are super exciting. And I think the evidence of how exciting they are is the fact that there are new companies that are producing these products. They're producing them at scale. And importantly, they're also producing them profitably, and then they're able to take that capital, reinvest it, and grow the ecosystem as a whole.
Good stuff. Brilliant. Thank you so much for talking through all that. Really appreciate it. I'll let you get back to it.
Jason, appreciate your time. And again, Space News has been a fantastic facilitator in terms of helping grow the space ecosystem. And I know and hope it'll continue to be. So pleasure to spend time with you today.
Thank you. You too. Take care.